When we talk about Coinbase, I mentioned that one of the reasons I like this company is they choose to work with regulators to make sure everything they do is within the law. This gives them a moat compared to others in the industry. Too bad that the regulations for this new industry are not very clear. Sometimes the regulators do not want to provide clarity. For Upstart, the situation is quite different. The finance industry have a lot of regulations, but at least the laws and regulations are clear, even though they are not always easy to comply with. If you give people loans, all you should care is that person's ability to pay you back. So the lending platforms must be fair, treat everyone the same way. You cannot give different treatment based on the color of the skin, religion, sex, and national origin, among other things. This may sound very basic, but in reality, the world we are living in is far from fair. People are treated differently every day for all kinds of reasons or biases. And to use computer, use AI, is not the solution. Over the years, we learned if the raw data from the real world is messy, have a lot of biases, then garbage in, garbage out. The AI model trained using this data is also not reliable. So you have to be very careful, very thoughtful about which data to use, which not to use, and what modification you have to make sure the AI is truly bias-free and achieve real fair lending. It's very rare that a lending platform can achieve real fair lending. When that happens, CFPB, the government agency created to protect consumers, will issue a no action letter to their company. The letter basically saying, we look at how you give out loans and we are okay. As long as you keep doing what you are doing now, we will not take any enforcement actions against you. This is not a passionate love letter, but it is as good as you can get from the government. Currently, there's only one lending platform that's ever received such a letter. Yes, it's Upstart. That's why Upstart CEO can testify in the Congress with a lot of confidence, saying, compared to traditional models, Upstart approves 27% more consumers and lower interest rate by 3.6 percentage points on average. For near-prime consumers, Upstart model approves 95% more consumers, almost double, and reduce interest rate by 5.4 percentage points. The Upstart model provides higher approval rates and lower interest rates for every traditionally underserved demographic. Upstart, long before its IPO, chose to work with regulators, explaining to them how the model used 1,600 variables and what the lending result looked like. All this work led to the first no-action letter to Upstart in September 2017. In November 2020, CFPB renewed their letter. This time, it will last until the year 2023. Before the first letter, we already knew Upstart gave out more loans for lower interest, but just in the last 2 or 3 years, significant improvement was achieved again. For any Black American, your chance getting a loan is 45% higher. The rate is 21% lower from Upstart compared to other platforms. This is huge. Working with regulators certainly comes with cost. Sometimes it may slow things down a little bit. In 2020, some organizations claim the way Upstart using educational data can put certain group into disadvantage. Upstart is not collecting any information regarding race, age, sex, etc. So the only category that can potentially cause issues is education, which Upstart does collect. As a result, Upstart made some changes to the model, basically removing incoming SAT and ACT scores. They also normalized the data from MSI, the schools mostly serve minority groups, and non-MSI, to make sure they are treated on average equally. This also speaks to the power of their model. They use 1,600 variables. To remove any variable will not be an issue. There are always other things they can use to replace that. If you are building the largest tech company in the world, you have to think for the long term. Working with regulators, therefore, is important. Imagine one day when Upstart is doubling the revenue every year, suddenly regulators step in, ask them to stop and make some major changes to the model. That might cause the conversion rate to drop, because now Upstart can no longer predict each individual's ability to pay. With all the work Upstart already done with regulators, we can all relax. This will never happen. Okay, if you like the video, please share with your friends. The video is not investment advice. Thank you. Bye-bye.